Hello everyone, welcome to a new video. Today I will be analyzing a company that recently IPO'd, went public, and actually it's a company that you guys asked me in the comment section to analyze, so here is my analysis. The company in question is Brilliant Earth, which sells jewelry mostly online, and at the moment it is down 73% since the IPO. Nevertheless, before going into the analysis, the in-depth analysis on the company, let me quickly give you a short review of the main topics that I will be covering today. First, I will start with a general introduction to the company, and we'll also look at some key metrics. Then we will go into the industry and competitors, followed as always by the financials, and we will compare the financials of Brilliant Earth to the two other competitors, which in this case I selected Charles and Colvard and Pandora. After that, we will go into the stock price and valuation, and again we will compare the valuation to the two competitors I just mentioned now. And finally, as always, I will be giving my personal opinion on the company and also my future plans with it. With that said though, and after I remind you that if you enjoyed the video, it would be really super awesome if you could just give it a like, and please also consider subscribing to the channel if you want to see more stock analysis videos. But with that said, let's go for it. Brilliant Earth is a jewelry company founded in 2005 that sells ethically sourced jewelry. More concretely, they sell what they call beyond conflict-free diamonds, which essentially go through a more strict filter, ensuring that the diamonds bought do not finance rebel movements, protect against human rights abuses, minimizes environmental degradation, maintains safe and responsible labor practices, and supports community development. They also focus a lot on the supply chain transparency and transparency in general to make sure that customers know exactly where their pieces of jewelry, the ones that they are buying from Brilliant Earth, are coming from. To do so, they use blockchain to share the specific journey of each diamond. They don't do this blockchain thing for all the diamonds, only about 10% of the current ones they have, but if you go to their website, you will see that they have a specific section just for that, and once you select it and choose a diamond, you see exactly where it comes from and the different places it goes to before reaching you as an end customer. Personally, I think that the approach Brilliant Earth is taking is a very good one and has proven to be actually very powerful and effective one, as we will see with their excellent performance over the past years. Essentially, it proves that consumers actually value knowing that they are purchasing a piece of jewelry that is probably better than others in the market. Or even if it's not better than others out there, at least they know exactly where that piece of jewelry is coming from. In their website, they sell over 150,000 diamonds, and the way it works if you want to order one piece of jewelry is that if, of course, you just browse through their website, you see which one you like, you have all the information there, and then once you want to order it, just bear in mind that each piece of jewelry, or most pieces of jewelry, are custom made, which means that it takes between 6 and 12 business days for each piece to be prepared, so it's not something you can expect to receive within 1 to 3 business days like most other, let's say, Amazon online purchases that you might do. And it is true though that they have certain pieces of jewelry that they have more stock of and they are already prepared, and these ones they can be shipped sooner, but that's not the case for most of them. And then to get a better picture, the average order value of the company is of around $3,000, which is actually a bit lower than where they used to have it at, as they introduced lower price point SKUs which have higher gross margins. To sell all of these pieces of jewelry, they use a mix between their e-commerce platform and also showrooms. But the important thing is that they only do direct to consumer, so they sell really directly to the consumer without any intermediaries. In total, in the US at the moment, they have 15 showrooms, and the showrooms are used as a place where customers can interact with professionals that can advise them and that can show them different pieces of jewelry, so they also get some inspiration and a better idea, because of course it's typically a very large purchase that customers make, so it's important that they have kind of a feeling and someone to guide them through the process. And although I couldn't find the exact percentages, I would assume that most of the sales actually happen online. And on satisfaction, they have an NPS score, which is Net Promoter Score, and is basically a measure of satisfaction of 75 out of 100, which is pretty good. To get an idea of the size of the company, they currently employ around 480 people, and out of these, 80% are women, and from director level or above, 73% are also women, which is a ratio of women much higher than many other companies which are publicly traded. Moving now to the industry, a substantial part of their business comes from the bridal category, which is basically engagement and wedding rings. In the US, there are around 2 million marriages each year, and this figure has been consistent over the past 20 years, according to the US government statistics. Then the global fine jewelry market is estimated to be worth approximately $280 billion, according to Euromonitor. Despite its size, the jewelry industry is highly fragmented and includes players like mall jewelers, local independent stores, and department stores. Approximately 65% of the industry is composed of independent jewelers. Actually, on competitors, for the comparison, it was not easy, as usually I try to find other companies which are publicly traded in the US. But this time I had to go outside of the US to find another publicly traded company that was quite relevant and comparable. Actually, this is in Denmark. So the two companies that I selected, as I mentioned at the beginning, are Charles and Colvard, which sells jewelry at much smaller scale, and we will also see these reflected in the financials. And then Pandora, which is the world's largest jewelry brand and is a Danish company, trading also in the stock market there. Before comparing them, let's go first into the financials of Brilliant Earth. First, looking at the income statement, we see that revenues have been increasing substantially over the past 3 years at rates superior to 25%. For 2022, the guidance that the company gave is for it to grow between 18 to 23%, even if they actually had to lower the guidance for the year from what they initially forecasted or told investors. Breaking down the revenues by geography, we can see that only about 7% of total revenues come from outside the US. And then on profitability, the company has also been improving it, and actually it turned profitable in 2020. With cash flows, they already had positive operational cash flow since 2019, but these have been improving massively. Also, they have positive free cash flow, which this past year it was around $40 million. Looking at the balance sheet, this has a debt ratio of 65.76%, which is very conservative, so they are well capitalized with not too much debt. Also, they have $164 million in cash, which is quite a lot considering that their total assets are of $239 million. Basically, they have around 68% of their total assets just in cash. We also need to consider that the company is cash flow positive, so to me it seems like they are keeping quite a lot of cash in the sidelines, which maybe they could put to a better use, either maybe repurchasing stock of their own company, of course, or maybe investing further for growth. But regardless of that, the balance sheet looks very, very good. If we compare now the financials of Brilliant Earth with the two competitors, we have the Charles and Colvard is much smaller in size than Brilliant Earth, and Pandora much larger. On Pandora, it is worth noting that I converted the Danish crowns to US dollars, so it was easier to visualize the comparison. And on growth rates, Brilliant Earth is clearly outpacing both competitors, but on net income margins, the one with most consistent and higher ones is Pandora, which of course also makes sense as they are also the largest company. And this is also a positive sign that Brilliant Earth still has room for significant expansion in the net income margins as it grows more. Now it's time to look at the valuation. The company currently trades at around $4.5 per share and has a market cap of $434 million. Its PE ratio based on 2021 earnings, it was of around 16 times, and for 2022, what I did was to take the net income margins that they had for 2021 and extrapolate them to 2022 based on the lower end of the guidance that they gave for this year to try to be conservative. And doing that, we have a forward PE of around 14. To be honest, taking the same net income margins as last year might be quite optimistic, considering that inflation is here, many of the costs have risen, so it's likely that their net income margins will compress a bit this year, similar to what's happening in many other companies out there, but that's just, as I said, an estimation, and we have to see how they end up doing. Then on a price to free cash flow, the company trades at almost 11 times free cash flow, which is not very expensive either. Personally, I find the valuation of the company extremely attractive considering the growth prospects it has, the fact that it is profitable, extremely well capitalized, and that it appeals to wealthy customers, which usually tend to be less affected during periods of crisis if we were to run into one, which is, I think, the concern at the moment in the markets. And on top of that, we also have that, yes, it's true, they also appeal to to lower income customers, but this is mostly for the part of marriages, and as we saw, marriages have stayed relatively stable for the past 20 years, and even in the last financial crisis, when there were many people that were really not doing well financially speaking, there were around 2 million marriages. So maybe then in those cases people spend less on jewelry, but they will still spend something on a ring, which is something that really matters a lot. So the demand will still be there even in periods of recession. Comparing the valuation to the two competitors, first we have that Charles & Colvard trades at a PE of only 3.16 times and Pandora at 10 times. On Pandora, keep in mind that it trades in Europe and usually valuations tend to be slightly lower than in the US. And with Charles & Colvard, it seems very cheap, but I have not done a deep dive in it. So it could be that it is expecting profits this year to decline from the previous one, as last year actually they had net income margins of 32%, which I don't really think that they will be sustainable also moving forward, or at least this year. So probably that's what's happening, and that's why the company is trading so cheap. Then Pandora is already very well established and almost not growing revenues, so seeing Brilliant Earth only trading slightly more expensive is certainly much more attractive, as it offers much more growth ahead. With everything that we have looked at, what are my thoughts on Brilliant Earth? Firstly, I want to make very clear that as of the making of this video, I do not own any shares of the company. However, I do find it extremely attractive at the current prices, and I think that it offers substantial upside potential, as it is a company growing substantially, profitable, and with positive cash flows. So in an environment which is where we seem to be headed towards, which is an environment with higher interest rates, this is a company that won't need to borrow more money or to go into the capital markets to basically raise more capital to sustain their operations. They can already run on their own basically, so that's a very, very good thing. Then, although I personally have never bought any piece of jewelry, I must say that I really resonate with the values of the brand, and I think that society in general is evolving towards being more conscious about the impact of the items that we buy on a daily basis. Finally, I just want to add that during their earnings call, they really almost had no questions from analysts, which typically is a good sign that maybe there are not a lot of analysts covering the company, and it could be potentially even more undervalued. And summarizing, don't be surprised if in the future I end up adding the company in my portfolio. As I said, for now I don't own any shares, but it's really looking super attractive. Anyways, please remember that everything I share in this video is just based on my opinion, my research, and my calculations, which of course all of these could be wrong, so I take absolutely no responsibility, as I am no financial advisor, and you should always do your own due diligence whenever investing in this or any stock. With that said though, what are your thoughts on Brilliant Earth? Have you invested in the company? Do you already own shares of it? Please let me know in the comments below. If you enjoyed the video, then don't forget to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.